Good evening everyone. My name is Surbhi kannoujia. I am from BCom Honors second year section E. My roll number is 317 and I am from group number 9. My topic is drawbacks of Indian tax structure and required measure for improvement in Indian tax structure. So let's talk about it. First of all, I will talk about drawbacks of Indian tax structure. There are following points highlight the drawbacks in tax structure of India. The first point is high rate and low yield of direct tax. In India, as in other, the rate of direct tax is very high, but the contribution to the total tax revenue is very low. In 1950, the rate of income tax in India was one of the highest in the world, but the revenue was very insignificant. This is because high rate tax encouraged tax evasion and avoidance on a large scale. It may be noted that tax avoidance refers to arranging one financial affair within the law so as to minimize taxation liabilities, as opposed to tax evasion, which is failing to meet actual tax liability through example, not declaring income or profit. So the government gradually reduced the tax rate over the years. In spite of this, the rate of income tax in India is one of the highest in the world even today. The higher tax rate at present is 30%. Second point is low contribution of income tax. Although the rate of income tax is the highest in the India, the contribution from such is very low. Tax evasion seems to be the primary reason. Another reason is high exemption limit in a country where per capita income is very low. In India, the exemption limit has been raised from time to time, but the level of national per capita income have failed to increase proportionally. So consequently, more and more people have managed to come out of the tax net. India per capita income in 1990 and 2000 was rupees 16,447 rupees at current price, but the exemption limit in case of personal income tax was rupees 50,000. If other deductions are brought into consideration, such as investment in approved government securities such as unit of UTI of public provident fund or insurance policy, the exemption limit would be even more. The third point is double taxation of dividend. Moreover, due to double taxation of dividend, the rate of domestic saving and capital formation failed to increase appreciably. Company pay corporation and other taxes to the government. A portion of net profit after tax is usually distributed among shareholders in the form of dividend. A portion of such dividend income is again taxed away in the form of personal income tax. Consequently, those who pay tax on dividend income cannot save much, and companies find it increasingly difficult to raise financial resource on a large scale. The fourth point is absence of agriculture income tax. Another feature Indian tax system is that there is no tax on agriculture income. Agriculture is the dominant sector of the Indian economy. The contribution of agriculture and related activity to India GDP was 29.3 in 1999. Planned investment on agriculture has also increased over the years, but agriculture has failed to make any contribution to the introduction of government tax revenue. Since agriculture is a state subject, the introduction of the agriculture income tax system at the central level has not been possible. This is another reason for undue reliance on indirect tax. The fifth point is regressive nature. Moreover, indirect tax have become more and more regressive over the years. Such taxes are usually imposed on consumption goods. In general, poor people have a high propensity to consume than rich people. In fact, the marginal propensity to consume gradually decreases with an increase in income. Thus, poor people who spend the major portion of their small income on consumption goods pay the maximum amount of indirect tax. Thus, over the years, the direct tax system has become less and less progressive due to gradual reduction in personal income tax rate, while indirect tax have become more and more regressive due to inclusion of more and more items in the excise net. In this, I will take a simple example which will classify the points. Suppose we consider two individuals, Mr. X and Mr. Y. Their monthly income are 3000 and 10,000. Mr. X spent 2000 per month on consumption goods and Mr. Y 4000. Suppose there is a 10% excise duty on all item of consumption. Thus, is in absolute term, Mr. Y pay rupees 400 to the government in the form of indirect tax, but Mr. X pay only rupees 200. But the tax on Mr. X is much higher than the Mr. Y. Mr. X pays 6.6% on his monthly income in the form of tax, while Mr. pay only 4%. So this is the example. Make it clear that indirect taxes are highly regressive in nature. They fall more heavily on people who have a strong propensity to consume and less heavily on rich people who have a strong propensity to save. This is another important change that had occurred in Indian tax structure during the plan period. So that is all about drawbacks of Indian tax structure. Now I will talk about what are the required measures for improvement in Indian tax structure. So the first point is ensuring equality between direct and indirect tax. As we know that direct taxation is dominant in the country tax structure, thus there is an urgent need to recast the system with a view for promoting equality between direct and indirect taxation. In other words, tax structure should be revised for ensuring equality among the rich and poor. For this purpose, tax structure should be imposed on the higher agriculture income and total exemption on essential goods and services be allowed. So the government should always make sure that there is a equality between direct and indirect tax, and good produce with labor intensive technique should be made completely free from the burden of indirect taxation. The second point is to check the tax evasion. To avoid the tax evasion, tax system should be broadened in such way that no scope is left for its avoidance. Government should take strict action against them which break the laws, and tax evasion should be made oppressive. The next point is introduction of expenditure tax. Sometimes back it was proposed to introduce the expenditure tax instead of income tax. This was the new experience for India. First of all, Professor Nicholas Calder recommended in his report in Indian tax reform. The tax was imposed in 1957 but soon abandoned in 1962. Again, it was reimposed in 1964 and abolished in 1966. Vancho Committee has also examined the feasibility of reintroducing the same but did not recommend its reimposition in the country. The expenditure tax implies the shift in the base of the personal direct taxation from income to expenditure. In other words, it amounts taxing every individual on the basis of consumption. The next point is quick settlement. To avoid the problem in collection of tax, certain minimum and maximum limit should be fixed by government and pending cases should be immediately decided. So there will be no problem in collection of tax. The fifth point is progressive taxation. To curb the regressive tax policy should be formulated to make the tax structure more and more progressive. In other words, the more burden may fall on the rich people and the less burden on the poor section of the society. At the same time, efforts should be made to check concentration of income and wealth in few hands. The last point is economic growth. The tax structure should be so designed that it may accelerate the economic growth of the country. For bringing smooth working of the system, rational thinking should be made to check the loopholes in the administrative setup. Law which are self-contradictory should be reformed accordingly. The strategy of taxation should aim to encourage saving, investment, and labor-intensive technique in production. In short, coordination between direct and indirect taxation will gear more investment for economic development of the country. So that is all about required measure for improvement in Indian tax structure. Thank you.